When you speak about a long-term vision for a trading journey, most people instinctively imagine a destination defined by numbers, account size, monthly returns, freedom from a job, or a lifestyle funded by market profits. But that framing already reveals why so many trading journeys end in frustration or quiet abandonment. The financially mature trader does not begin with profit as the vision. Profit is an output. The true long-term vision begins with identity structure and psychological durability. Because trading is not a skill you briefly use to extract money from the market. It is an environment that relentlessly exposes who you are, magnifies your weaknesses and rewards only those who are willing to evolve faster than their own ego. A serious long-term trading vision starts with an honest acknowledgement of what trading really is. Trading is not prediction, and it is not intelligence. It is decision-making under uncertainty, repeated thousands of times with real consequences attached. The market does not reward brilliance in isolated moments. It rewards consistency of process across long stretches of boredom drawdowns and emotional discomfort. Therefore, a long-term vision cannot be centered on excitement or constant action. It must be built around the idea of becoming someone who can operate calmly, rationally, and decisively in an environment specifically designed to provoke fear, greed, impatience, and overconfidence. This is why the first layer of a long-term vision is psychological sovereignty. Before capital grows, the trader must grow the ability to remain internally stable, regardless of short-term outcomes. This does not mean suppressing emotion. It means designing systems that prevent emotion from hijacking behavior. Elite traders understand that discipline is not a personality trait, but an environmental outcome. They design rules, risk limits, routines, and review processes that protect them from themselves. Their vision is not to feel confident every day, but to remain solvent and rational, long enough for their edge to express itself over time. A meaningful long-term vision also reframes the concept of time. Most traders secretly operate on short timelines, even when they claim to think long-term. They want validation within weeks, consistency within months, and freedom within a year or two. The market punishes this impatience mercilessly. A mature vision stretches across years and even decades. It accepts that the early phase of trading is not about making money, but about paying tuition to the market in exchange for pattern recognition, emotional calibration, and self-knowledge. Losses when controlled are not failures, they are data. The trader who survives long enough to internalize this truth gains an advantage that cannot be taught in courses or copied from charts. Another critical pillar of a long-term trading vision is process over outcome. The financially elite trader does not ask, "Did I make money today?" but "Did I execute my process with precision?" Money made from poor execution is considered dangerous because it reinforces bad behavior. Money lost from good execution is considered acceptable because it strengthens discipline. This inversion of reward logic is one of the hardest mental shifts in trading, and yet it is non-negotiable for longevity. A long-term vision therefore includes the goal of becoming process-oriented to the point where short-term P&L loses its emotional grip. Risk in this vision is not something to be avoided, but something to be respected and shaped. The long-term trader understands that survival is the first form of success. Position sizing drawdown limits and capital preservation are treated as sacred, not optional. The vision is not to maximize returns in favorable periods, but to remain alive through unfavorable ones. This mindset leads to a paradox. By focusing obsessively on not blowing up, the trader creates the conditions necessary for compounding to eventually work. Many traders aim to get rich. Elite traders aim to stay in the game. A serious long-term vision also includes a clear understanding of one's personal edge. Not every trader is meant to trade every market time frame or strategy. Some thrive in volatility, others in structure. Some excel at discretion, others at rules-based systems. The vision is not to master everything, but to specialize deeply in a narrow domain where personal temperament aligns with market behavior. This requires brutal self-honesty and the willingness to abandon strategies that look good on paper but feel psychologically unsustainable in real time. The financially mature trader builds a vision around alignment, not imitation. Lifestyle integration is another often overlooked component. Trading does not exist in isolation from the rest of life. Sleep-health relationships and daily structure directly influence decision quality. A long-term vision recognizes that a trader who sacrifices health or mental clarity for screen time is quietly undermining future performance. The goal is not to trade more, but to trade better. This often means fewer trades, more rest, and stricter boundaries. The elite trader's life may look uneventful from the outside, but it is optimized for clarity and repeatability. This is not asceticism, it is strategic restraint. Capital growth in a long-term vision is gradual and uneven. Plateaus are expected. Drawdowns are anticipated. Periods of apparent stagnation are understood as consolidation phases rather than signs of failure. The trader who survives long enough learns that progress in trading often happens in jumps rather than smooth lines. Long stretches of effort produce little visible reward, followed by sudden integration, where everything clicks at a higher level. The vision, therefore, must include patience, not as a virtue, but as a requirement. Without patience, even a real edge will be abandoned prematurely. Another layer of the long-term vision involves independence of thought. Markets evolve. Strategies decay. What worked in one regime may fail in another. The trader who relies solely on external signals, gurus, or rigid beliefs becomes fragile. The financially elite trader invests continuously in understanding market structure, participant behavior, and macro context, not to predict the future, but to adapt intelligently. Learning is not front-loaded at the beginning of the journey. It is ongoing. The vision is to become anti-fragile in thinking capable of updating beliefs without emotional attachment. Equally important is redefining success itself. In a long-term trading journey, success is not measured solely by income, but by optionality. Can trading be scaled down during life transitions without panic? Can it be paused without financial collapse? Can it coexist with other income streams or investments? The elite trader does not build a life that depends on daily market extraction. Trading becomes one pillar of a broader financial architecture, not a single point of failure. This reduces pressure, and reduced pressure leads to better decisions. Perhaps the most subtle but powerful element of a long-term vision is identity separation. The trader is not the P&L. Wins do not inflate the ego. Losses do not define self-worth. This separation allows honest review and continuous improvement. Most traders say they want to learn, but few can look at their own mistakes without defensiveness. The elite trader builds a vision that includes becoming emotionally literate, capable of observing internal reactions without being controlled by them. This inner work is invisible, unglamorous, and yet it is where most of the real edge is built. When all these elements come together, the long-term vision for a trading journey stops being about beating the market and starts being about mastering oneself within the market. Trading becomes a mirror that reflects discipline, patience, humility, and adaptability, or the lack thereof. The vision, then, is not a finish line, but a direction toward increasing clarity, increasing control over behavior, and increasing alignment between strategy, psychology, and lifestyle. Money becomes a scorecard, not the purpose. At this stage, the trader begins to understand that longevity itself is a competitive advantage. Most participants will quit, blow up, or stagnate. Simply by surviving refining and staying engaged with intention, one moves into a smaller and more capable cohort over time. This is why the long-term vision must be resilient enough to carry you through periods where progress feels invisible and motivation fades. It must be rooted in principles rather than excitement. And it is precisely here at the point where the vision shifts from external results to internal architecture that the trading journey truly begins, because from this foundation, the next question naturally arises. How does one structure daily practice capital deployment and feedback loops in a way that steadily transforms this vision into lived reality, without relying on bursts of motivation or unrealistic expectations? And this is where the deeper mechanics of building a trader's operating system come into focus as we continue forward into the next part and examine how long-term vision is translated into concrete structures, routines, and decision frameworks that quietly compound skill and capital over time without drama or dependency on favorable conditions. Because without this translation, vision remains abstract and fragile. And it is exactly at this point that most people lose momentum, not because the vision is wrong, but because it has not yet been grounded into a system that can carry them forward, even on days when confidence is low and the market is indifferent. And it is from this unfinished sentence that we now move seamlessly into the continuation, where the architecture of a sustainable trading life begins to take shape, as the vision moves from intention into execution, and from aspiration into disciplined daily reality, where the real separation between amateurs and professionals quietly takes place. As the journey unfolds further and demands a level of structure and self-honesty that cannot be bypassed and must be built deliberately over time, through choices that seem small in isolation, but become decisive when compounded over years of participation in an unforgiving but profoundly instructive arena that rewards those who treat it not as a casino or a shortcut, but as a long-term craft and a personal evolution process that continues to deepen as long as one remains willing to learn, adapt, and commit to the standards required to operate at a level where consistency replaces hope and clarity replaces noise. And this is precisely where we now continue as the next phase begins, by turning abstract intention into a concrete operating system that governs how you show up every day, regardless of mood, recent results, or external noise. Because the market does not respond to desire or vision, it responds only to behavior, repeated with enough consistency to reveal whether an edge truly exists. And this is where most long-term trading visions collapse, not from lack of intelligence or effort, but from the absence of structure strong enough to carry the trader through inevitable periods of doubt, boredom, and emotional fatigue. The financially mature trader understands that daily structure is not about productivity, but about containment. Trading must be placed inside boundaries so that it does not leak into identity relationships or emotional stability. This begins with clearly defined trading windows, pre-market preparation rituals, and post-market review routines that are followed whether trades are taken or not. The vision is not to be active every day, but to be prepared every day. Preparation compounds even when no money is made, while impulsive action compounds errors. Over time, this quiet discipline creates an internal calm that becomes a competitive advantage in itself. At the center of this operating system lies a written trading plan that is treated not as a suggestion, but as law. Entry criteria, exit logic, position sizing rules, maximum daily and weekly loss limits, and conditions for standing aside are all defined in advance. The long-term trader does not negotiate with the market in real time. Decisions are pre-made when the mind is calm. This is not rigidity, but self-respect. You are protecting your future self from your present emotions. The vision here is to reach a point where deviation from the plan feels physically uncomfortable because identity has shifted from someone who wants to win to someone who executes cleanly. Feedback loops are another critical pillar. Every trade is reviewed not for profit or loss, but for quality of execution. Screenshots, notes, emotional states, and rule adherence are logged consistently. Patterns emerge not only in charts, but in behavior. The trader begins to see recurring mistakes, recurring strengths, and recurring emotional triggers. This data-driven self-awareness is what slowly transforms intuition from guesswork into calibrated judgment. The long-term vision includes becoming your own coach, because outsourcing accountability eventually erodes self-trust. Capital deployment within this system is intentionally conservative in the early and middle phases. Size is increased only when consistency of execution is demonstrated over a statistically meaningful sample, not after a winning streak. The trader learns to decouple confidence from recent results and anchor it instead to rule adherence. This patience feels unnatural at first, especially in a culture that celebrates aggression, but over time, it produces something far more valuable than fast growth durability. And durability is what allows compounding to eventually do its quiet work. Equally important is how the trader designs recovery and rest. Days off are scheduled, not earned. Breaks after drawdowns are mandatory, not optional. The vision recognizes that fatigue distorts perception and that overstaying in the market often causes more damage than missing opportunity. This restraint is not weakness, it is professionalism. The trader who knows when not to trade is already operating at a higher level than one who is constantly searching for action. As years pass, the long-term vision evolves. Strategies are refined or replaced. Markets change. Personal circumstances shift. The trader who survives is the one who treats adaptation as part of the path rather than as evidence of failure. There is no final system, only systems that work for a time. The vision, therefore, includes humility as a permanent companion. You are never done learning, and the moment you believe you have mastered the market is usually the moment risk quietly begins to accumulate beneath your confidence. Eventually, if the journey is honored with patience and honesty, trading takes its proper place in life. It becomes quieter, more selective, less emotionally charged. Fewer trades are needed. Less screen time is required. Decision quality improves as pressure decreases. At this stage, trading no longer feels like a battle against the market, but a dialogue with uncertainty where you know your role and respect its power. Income becomes more consistent, not because the market has become easier, but because you have become more aligned with your own constraints and strengths. The deepest lesson, however, is internal. Trading teaches you where you lack patience, where you seek validation, where you avoid responsibility, and where you cling to control in an uncontrollable world. A long-term vision that survives must include the willingness to face these truths without self-deception. This is why so few make it. The market is a mirror that never flatters, and most people eventually look away. Those who do not emerge with something far more valuable than profit alone self-mastery under pressure. So the real long-term vision for a trading journey is not domination of the market, but alignment with reality. It is the decision to build a life where trading serves clarity rather than chaos, freedom rather than compulsion, and growth rather than ego. When this alignment is achieved, results follow naturally, unevenly, but sustainably. And at that point, whether you trade for income, capital growth, or intellectual engagement, You are no longer dependent on hope or luck, because your edge is no longer just a strategy. It is who you have become through years of disciplined interaction with uncertainty. If this perspective resonates with you, if it reframes trading from a chase into a craft, then consider subscribing to the channel to continue this deeper exploration of markets mindset and long-term independence. And I invite you to leave a comment, sharing what part of this vision challenged you the most, or what structural change you are now committed to making. Because trading transforms, not when ideas are admired, but when they are applied consistently. Enough to change behavior and, over time, identity itself.